Have you ever wondered how to achieve financial freedom before your 30s? If you're between 18 and 25, just starting your career or thinking about your financial future, this video is for you. We'll show you why starting to invest now, even with small amounts, can make a huge difference in your life. From understanding the power of compound interest to learning simple, beginner-friendly steps to build wealth, we'll break it all down. You'll also discover common mistakes to avoid, tools to help you grow your knowledge, and how to set achievable goals that keep you consistent and motivated. Ready to take control of your finances and create a solid foundation for your future? Let's get started. Why starting to invest early is the smartest financial decision. Starting your investment journey early has one massive advantage: time. The earlier you begin, the more you can harness the power of compound interest, allowing your money to grow significantly with each passing year. Compound interest is essentially the interest on your interest, meaning the gains from your initial investment start to earn returns on their own. Imagine this: if you begin investing just £50 a month at 20 years old, with a modest return of 6% per year, by the time you're 30, that small monthly amount could grow to over £8,000. Now, picture if you had to start later, say at 30. Even with the same monthly contributions, you'd lose a full decade of growth potential. This difference highlights the real value of getting started now, even if it's with small amounts. It's not about making a big financial commitment, but about developing a habit that will compound into something significant. By building a financial base now, you're setting yourself up for a future that's financially secure and filled with possibilities. So, how do you take those first steps toward financial freedom? Let's look at the basics of getting started in our next section. First steps to start investing. Taking those first steps towards investing doesn't have to be overwhelming. In fact, it's easier than most people think. First, you'll need to open an investment account, often called a brokerage account, with a trusted platform. Many of these platforms let you set up a basic account online in minutes, and most offer guidance to help you select investments that fit your profile as a new investor. Once your account is set up, it's important to assess your risk tolerance, how comfortable you are with market ups and downs. This helps you choose investments that won't cause stress and aligns them with your long-term goals. The next priority is to build an emergency fund. Think of this as a safety net, separate from your investment money, ideally holding 3 to 6 months of living expenses. This cushion prevents you from needing to dip into your investments in case of emergencies. Now, you're ready to explore basic investments. Consider starting with safer options like bonds or index funds, which track the overall stock market. These are beginner-friendly choices, offering a way to grow your money steadily over time without high risk. Remember, starting small and steady is key. Small contributions can grow impressively if you stay consistent. Up next, let's cover common mistakes to avoid so you can keep your investments on track. Common mistakes beginners make and how to avoid them. Starting out in the world of investing is exciting, but it's easy to fall into common traps that can derail your progress. One of the most frequent mistakes is taking on debt, like credit card balances, to invest. While investing is essential, high-interest debt should be tackled first, as it typically costs more than your initial returns from most investments. So, before diving in, make sure your financial foundation is solid by paying down any high-interest debt. Another pitfall is chasing after get-rich-quick schemes or investments that promise high returns with minimal risk. These can be tempting but are usually too good to be true and often come with significant risk. To build a solid portfolio, stick with investments that grow steadily over time, rather than taking risks that could jeopardize your progress. Finally, a common error among new investors is failing to diversify. Placing all your money in a single asset increases your risk. Diversifying, spreading investments across different types, gives you a safety net, balancing potential losses with gains. Knowing these pitfalls means you're already a step ahead on your journey. Next, we'll dive into some free tools and resources to keep your knowledge growing. Free tools and resources to learn about finance. One of the great things about starting your financial journey today is the wealth of free resources available to help you learn. For tracking your investments and understanding the basics, consider using apps like Mint or Personal Capital. These tools offer budgeting and tracking features that make it easy to see your spending and investment performance at a glance. For deeper knowledge, YouTube channels, blogs, and podcasts dedicated to personal finance can be invaluable. Channels like The Financial Diet and Graham Stephan break down investing concepts for beginners in a straightforward, engaging way. Additionally, many financial websites offer free courses and tutorials on everything from stock basics to retirement planning. Resources like Investopedia or Coursera's introductory finance courses are excellent starting points. Finally, simulators like Trading 212 allow you to practice investing in a risk-free environment, making it possible to explore the market without fear of loss. With these tools, you can grow your knowledge and confidence step by step, preparing you for real-world investing. Now that you're equipped with the basics and resources, let's talk about the importance of setting clear goals and staying consistent. The power of goals and consistency. Setting financial goals is one of the most empowering steps you can take as a new investor. Begin by defining what you want to achieve in the short, medium, and long term. Short-term goals might include building your emergency fund, while medium-term goals could focus on saving for a major purchase, like a car or a trip. Long-term goals often involve bigger milestones, such as a comfortable retirement or even financial independence. Having clear targets makes it easier to stay motivated and track your progress. Equally important is consistency. Investing small amounts regularly, even as little as £20 or £50 per month, can lead to substantial growth over time. Consistency is the true secret of long-term success in investing, as it allows you to leverage market growth while developing a habit of saving and investing. Think of it as planting seeds that, with steady care, will grow into a flourishing garden. Whether markets go up or down, sticking with your plan and regularly investing will keep you moving toward your goals. In our final section, we'll wrap up and give you a final nudge to take your first steps today. Conclusion and call to action. Let's quickly recap. Starting early, setting clear goals, and staying consistent are the keys to building a strong financial foundation. By taking small steps today, whether it's opening your first investment account, setting aside funds regularly, or educating yourself with free resources, you're creating opportunities for a financially secure and independent future. Remember, the power of investing lies in the choices you make now, even if they seem small. So, why wait? Start today. Open an account, explore your first investment, and take control of your financial destiny. If you found value in this video, don't forget to like, subscribe, and share it with friends who might also need a boost to start their journey. Together, we can build a community of financially empowered young investors. Let's make that future brighter, starting now. Let's quickly recap. Starting early, setting clear goals, and staying consistent are the keys to building a strong financial foundation. By taking small steps today, whether it's opening your first investment account, setting aside funds regularly, or educating yourself with free resources, you're creating opportunities for a financially secure and independent future. Remember, the power of investing lies in the choices you make now, even if they seem small. If you found this video helpful or inspiring, don't forget to leave a like. It really helps us reach more people like you. Also, we'd love to hear from you. What's your biggest takeaway from today's video? Drop a comment below, and let's start a conversation. Don't forget to subscribe to the channel so you won't miss any of our future content, and share this video with a friend who could benefit from taking their first steps toward investing. Finally, if you enjoyed this video and feel it added value to your financial journey, I've got even more for you. Check out our next video. It's packed with additional tips to help you go even further on the path to financial independence. Trust me, you won't want to miss it.